Now, in an early festive season gift, the Reserve Bank of India has slashed its key lending rate by 0.25%. If banks pass on the benefit to consumers, it can boost liquidity and consumption in the market, spurring on economic growth. At the same time, inflation targeting is also being kept in mind to ensure it stays at 5% till March next year.
Reserve Bank of India's gift to the markets and consumers ahead of the festive season took the form of the much-awaited rate cut. The central bank has slashed key policy rates, which is likely to make loans cheaper and provide greater liquidity in the market. Repo rate has been reduced by 0.25%, and now banks can borrow from RBI at 6.25%. But it remains to be seen how much of this will be passed on to the consumers. Post-January 2015, RBI has reduced interest rates 6 times, but banks have passed on little benefit to consumers.
I agree that the transmission to bank lending and to bank borrowers has been less than any one of us would have liked to. And we are hoping that over the next quarter or two, also keeping in mind that the government has now also reduced the small savings rate. So the government's intention to bring that to the more market related is also been now amplified. That the MCLR calculation itself will now throw up more transmission.
Why expect a cut in interest rates? RBI in its review has made it clear that the focus is on growth. As banks can avail money at a reduced rate, they may consider reducing interest rates on loans. The festive season has begun and demand for loans usually sees a spike during this time. RBI has made it clear that banks will not be short of funds. Apart from this, banks are enjoying increased liquidity after the recent reduction in rates of interest on savings and deposits. Finance Ministry has welcomed the latest policy announcements of RBI.
Food grain production बढ़ेगा और rural economy में खुशहाली आएगी, उनके हाथ में पैसा आएगा, जिससे उनको अपने जो भी investment decisions हैं, जो भी expenditure decisions हैं, वो लेने में सहूलियत होगी.
The good news is that inflation is expected to hover around 5% till March 2017. RBI says this year GDP is expected to grow at 7.6%. Amidst a lackluster performance by global economies, India still hopes to post a growth of 7.9% next financial year. RBI's policy announcements hold significance for many reasons. Alongside major policy decisions to curb inflation, a new procedure to decide policy rates has also been adopted. An act was passed in the parliament which called for keeping the retail price inflation between 2 to 6%. A committee has been formed comprising of representatives from both RBI and centre, which now makes the call on key policy rates of the central bank. It was for the first time that a 6-member committee took the decision to reduce the repo rate, and this decision was a unanimous one.
Governor Urjit Patel did mention that the global factors do look difficult, but the domestic factors are strong right now. He also stressed that the utmost importance for the RBI is dealing with the NPAs. With camera person Gaurav Kagra, this is Shama Mishra for DD News, Mumbai.